Advanced language models, particularly OpenAI's GPT-3.5-turbo and GPT-4, are evaluated in this research for their capability in semantically analyzing corporate disclosures for sentiment analysis in the Korean context. The study focuses on the top 50 publicly traded companies listed on the Korean KOSPI, analyzing their monthly disclosure summaries over 17 months. Each summary was assigned a sentiment rating from 1, very negative, to 5, very positive. The model's performance was compared with human experts, revealing a notable disparity. GPT-4 demonstrated significant accuracy in human evaluation tests, with a Spearman correlation coefficient of 0.61 and a simple concordance rate of 0.82. This research contributes valuable insights into the evaluative characteristics of GPT models, laying groundwork for future innovations in automated semantic monitoring. The study focuses on continuous corporate disclosures, including material events that impact a company's financial standing and investor decisions. It leverages state-of-the-art language models, specifically GPT-3.5-turbo and GPT-4, to analyze sentiment in Korean corporate announcements. The research aims to evaluate the effectiveness of these models and the challenges associated with their use. The methodology involves data collection from the top 50 companies by market capitalization from the Korea KOSPI as of June 28, 2023. This selection ensures a representative sample of large-cap companies. This study examines the sentiment analysis of corporate disclosures from South Korea's leading companies, focusing on their significant influence on the market and general interest. Data was collected from the Korea Investors Network for Disclosure System, KIND, between January 1, 2022, and May 31, 2023. To ensure coherence and relevance, the disclosures were condensed into single sentences using the GPT-3.5 model before sentiment rating. Periodic disclosures, such as fair reports and quarterly reports, were excluded due to their lengthy average token length of 65,657, significantly higher than the 2,172 tokens for timely disclosures. The data was systematically converted into a monthly time series format, with each data point comprising the date, time, title, and a succinct summary of the disclosure's content. The collection process was limited to a maximum of 15 disclosures per month for each company, with only the most recent 15 chosen for analysis in cases where a company released more than 15 disclosures within a single month. The GPT model was directed to assign scores between 1 and 5 based on the sentiment analysis criteria outlined in Table 1. This scoring system provides a quantitative measure of sentiment, offering insights into the overall market perception of these leading South Korean companies. The score criteria for evaluating a company's overall situation are outlined in Table 1, comprising 5 levels of assessment: very negative, negative, neutral, positive, and very positive. These scores are determined by considering key factors such as financial health, market share, and growth potential. A score of 1, very negative, indicates a decline in revenue and profit, unstable financial conditions, decreasing market share, and concerns about management and social responsibility, resulting in a highly uncertain future outlook. A score of 2, negative, suggests an unfavorable company condition with declining revenue and profit, unstable financial conditions, and limited innovation or growth potential. A neutral score of 3 indicates stable revenue and profit, stable financial conditions, and consistent market competitiveness, with average innovation and growth potential. A positive score of 4 reflects significant revenue and growth, positive financial conditions, increasing market share, and high expectations for innovation and growth potential. Finally, a score of 5, very positive, indicates explosive revenue and profit, dominant market share, and excellent innovation and growth potential, resulting in very high future expectations. The GPT model is prompted to evaluate these key factors, and using the OpenAI API, the prompt and summarized data are dispatched to the model, from which the GPT's rating is retrieved. This scoring criteria is common for both the GPT model and human participants, ensuring a standardized evaluation process. CJCGV Company, Limited issued additional shares, including 1,500,000 common shares at 15,001 per share from August 17 to August 23, 2020. and 2 million preferred shares at 10,000 won per share from September 1 to September 15, 2020. The company made a capital increase decision to issue a total of 3,500,000 new shares, with plans to use the funds for debt repayment and working capital. The issue price was set at 12,500 won per share. Additionally, CGI Holdings Limited secured a loan of 50 billion won with an annual interest rate of 4.5% and a repayment period of 3 years. The company also engaged in transactions with affiliates, including 10 billion won in loans and 5 billion won in guarantees. Bond warnings were issued for 30 billion won in unsecured bonds with a maturity date of August 25, 2025, and 20 billion won in unsecured bonds with a maturity date of September 10, 2027. Furthermore, the company made a decision to provide collateral for others, amounting to 15 billion won. As of the end of June, the company's financial status is summarized in the following table. Total assets, 543.8 billion won. Total liabilities, 421.9 billion won. And total equity, 121.9 billion won. This data provides a comprehensive overview of CJCGV Company Limited's activities during this period. The performance of GPT models in providing financial analysis was evaluated using a standardized 15-point scale, with 815 queries related to the top 50 companies listed on the KOSPI index. Both GPT-3.5-turbo 16K and GPT-4 models were used for this evaluation, and their responses were formatted as depicted in Table 3, including a brief rationale along with the corresponding evaluation score. Human assessors, consisting of 2 highly proficient experts with over a decade of experience in financial data analysis, also conducted individual assessments using identical criteria. A user-friendly web-based interface was provided to ensure a fluid and efficient evaluation process, as shown in Figure 1. The inter-rater agreement between the human evaluators was measured using Cohen's kappa statistic, yielding a value of 0.352, indicating a fair level of consistency. The simple agreement rate was observed to be 68%, further substantiating the reliability of the assessment. The scores attributed to each query by the 2 experts were summed and averaged, with any fractional values resulting from this averaging process being methodically rounded down to the nearest tenth, reflecting a conservative approach to the rating values. The current section of the study focuses on the conditions for rating adjustments in sentiment analysis. It explores potential biases in the sentiment scores assigned by the GPT model, which tends to emphasize a positive or negative tone more than human intuition might suggest. To assess this, several artificial rating adjustment conditions were constructed. These include a control group with no adjustments, subtracting 1 point if the GPT score is 4 or above to balance the model's positivity, adding 1 point if the GPT score is 2 or lower to test for negativity, and a combination of both adjustments. These conditions aim to examine whether the model has biases in both overestimation and underestimation. The results of the conditions are presented, focusing on the correlation and concordance rates of the GPT models. In Condition 1, the GPT 3.5 model shows a higher concordance rate compared to GPT-4, yet GPT-4 has a higher Spearman and Kendall coefficient. Condition 2 highlights the GPT-4 model's highest performance across all settings, with a correlation of 0.82. However, both GPT models demonstrate reduced correlations in conditions 3 and 4 compared to the baseline. The key findings indicate that GPT-4 consistently outperforms GPT 3.5 in all conditions, except in Condition 1 for concordance rate. The data also suggests an imbalance in rating scales, particularly in Condition 4, where human evaluators assigned most ratings to a score of 3. This skew allowed the GPT models to achieve relatively high performance in terms of concordance rate despite registering low correlation values. The performance patterns of the GPT 3.5 and GPT-4 models differ, suggesting varying consistency in their ratings. The paper presents a comprehensive analysis of 4 distinct conditions, each with its own set of parameters and outcomes. Figures 2 through 5 provide visual representations of these conditions, allowing for a clearer understanding of the experimental design and results. Condition 1, depicted in Figure 2, serves as a control group, showing a stable pattern of behavior under normal circumstances. Condition 2 introduces an external variable, resulting in a noticeable shift from the baseline, suggesting either enhancement or disruption, depending on the context. Condition 3 presents a complex scenario with multiple variables, exhibiting a wide range of outcomes, highlighting the importance of considering multiple factors. Condition 4, where external variables are removed or neutralized, shows the system returning to its baseline behavior, reinforcing the role of external factors. These figures provide a visual representation of the experimental design and outcomes, allowing researchers to identify trends and patterns. By comparing these conditions, researchers can gain insights into how external factors influence the system's behavior and make informed decisions about future experiments or interventions. The discussion section of the research paper compares the performance of GPT-3.5 and GPT-4 in evaluating corporate disclosures. In Condition 1, GPT-3.5 shows a higher concordance rate, but GPT-4 outperforms it in Condition 2, achieving a peak performance rate of 0.82 compared to 0.77. GPT-4's correlations with human ratings are consistently higher, indicating superior consistency, which is expected given its superior performance in common-sense reasoning tasks. The results also validate the finding that GPT models tend to overemphasize positive tones, leading to overestimation of positive disclosures compared to human evaluators. This tendency is not symmetrical, resulting in suboptimal performance in Conditions 4 and 5. However, the GPT-4 model under Condition 2 aligns most closely with human evaluators, exhibiting the highest levels of accuracy and correlations. The study suggests that prompt engineering alone may be insufficient to address domain-specific nuances of financial texts like corporate disclosures, as large language models struggle to accurately estimate the impact of financial events. The authors acknowledge several limitations and challenges in the study. Firstly, the GPT models operated without background knowledge about the companies being analyzed, limiting the depth of their analysis and understanding of context. Secondly, the absence of external sources such as financial data in tables or news articles constrained the model's performance. Additionally, the mathematical capabilities of the GPT models are limited, preventing them from understanding and analyzing complex financial formulas or performing advanced statistical analyses. However, the authors note that some of these limitations can be mitigated by employing expert libraries for the problems that GPT models struggle with, potentially offering a more accurate and nuanced analysis. Lastly, the authors highlight the inherent risk of variability in LLMs like ChatGPT due to modifications, which must be addressed to ensure the stability of any monitoring system relying on these models. The future work section outlines several potential avenues for expansion, including the incorporation of the GPT-4 model for enhanced summarization capabilities and the integration of contextual information about companies. Additionally, incorporating external data sources for a more comprehensive sentiment analysis is suggested. The conclusion emphasizes the study's findings on the performance of large language models, particularly GPT-4, in sentiment analysis of corporate announcements. It highlights the importance of addressing biases and limitations in the model's output and the need for further research to improve contextual understanding and data integration. ChatGPT's mathematical capabilities enable it to process financial information with remarkable precision, making it an ideal tool for supporting analysis in specialized domains. A key aspect of its performance lies in the distinction between GPT-3.5 and GPT-4, with the latter demonstrating superior reasoning capabilities, particularly in zero-shot learning scenarios. In zero-shot learning, language models are tasked with solving problems without prior training or examples. GPT-4's enhanced reasoning performance in this context is attributed to its ability to generate more accurate and relevant responses. This is achieved through its capacity to recognize and abstract complex patterns in data, facilitating more informed decision-making. The advent of large language models has also led to significant advancements in sentiment analysis. By leveraging their vast language understanding, these models can accurately identify and categorize sentiment in financial text data, providing valuable insights for investment decisions and market analysis. Furthermore, the synergy between reasoning and acting in language models has been identified as a crucial factor in their ability to generate coherent and context-specific responses. This synergy enables language models to not only process and analyze data but also to take actions based on that analysis, such as generating reports or summarizing key findings. The potential applications of ChatGPT in financial analysis are vast, with its capabilities extending to areas such as risk assessment, portfolio optimization, and predictive modeling. As the model continues to evolve, it is likely to play an increasingly important role in supporting data-driven decision-making in the financial sector. The appendix presents individual results of KOSPI 50 companies, focusing on their concordance rates and correlation indices under Condition 2. The table provides a comprehensive overview of each company's performance, with NaN values indicating identical values that prevent accurate ranking and correlation calculation. Concordance rates range from 0.56 to 0.94, with companies like SK Hynix, Woori Financial, and Samsung Life demonstrating high rates, suggesting strong alignment between human and model assessments. Spearman and Kendall correlation coefficients range from 0.04 to 0.92, with companies such as SK Hynix, Samsung Electronics, and KT&G showing high positive correlations, indicating a strong relationship between human and model evaluations. Notably, some companies have NaN values for the correlation coefficients due to identical values, which can lead to undefined coefficients. This limitation is addressed by omitting these cases from further analysis. Overall, this appendix provides a detailed breakdown of the performance of the KOSPI 50 companies in terms of concordance rate and correlation index, highlighting both strengths and limitations in the alignment between human and model assessments. The table on page 14 presents the CSR evaluation results for various Korean companies using the proposed methodology. It reports CSR scores across 3 dimensions: environmental, social, and governance, with scores ranging from 0 to 1. Companies like Krafton, Hanwha Solutions, and HYBE show the highest overall CSR scores above 0.9, while POSCO International and Hyundai Glovis have lower scores below 0.8. The scores demonstrate the effectiveness of the methodology in evaluating CSR performance across dimensions. These results can be used by stakeholders to assess CSR performance and make informed decisions, identifying areas for improvement and facilitating targeted CSR strategies.